Is the Federal Reserve actually causing deflation by raising interest rates while it says that it wants to fight inflation? ARK Fund's CEO Cathie thinks that the Federal Reserve has actually crossed over the line by raising interest rates as far as it has. Wood thinks that the Federal Reserve is focusing on lagging indicators while the situation on the ground is changing quickly. Even the price of oil has dropped 35% from its June peak. So far in 2022, Powell has increased interest rates 4 times. The federal funds rate is now ranging between 2.25% and 2.50%. The U.S. Central Bank meets again on September 20th. So, what is really going on? What does this mean for inflation? What does this mean for interest rates? What does it mean for the U.S. economy? And, what does it mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Cathie thinks that Federal Reserve Chairman Jerome Powell is making a huge mistake as he continues to raise interest rates. Wood says that Powell is on a path of outsized interest rate hikes to tame inflation, and it is a disaster in the making. Inflation is quickly turning into deflation, Wood said. That means the Fed will likely have to pivot away from its interest rate hikes sooner than the market thinks, Wood continued. Making matters worse is the fact that the Fed is overly focused on lagging indicators like employment and core inflation, continued Wood. The Fed should be focusing on real-time developments in the economy that show signs of deflation, Wood added. Leading inflation indicators like gold and copper are flagging the risk of deflation, said Wood. Even the oil price has dropped more than 35% from its peak, erasing most of the gain this year, she said in a tweet on Wednesday. Many commodity prices have plunged and are trading at or near pre-pandemic levels. Gasoline prices, in particular, have dropped quickly since the June peak of $5 per gallon reached in June. The current U.S. average is $3.75 per gallon, according to AAA. In the pipeline, inflation is turning into deflation, Wood said. One of the best inflation gauges, the gold price peaked more than 2 years ago in August 2020 at $2,075 and has dropped 15%, added Wood. Lumber prices are down more than 60%. Copper is down 30%. Iron ore is down 60%. DRAM prices are down 46%. And WTI crude oil is down 35%. Retail company inventories have swollen in the past few months, compounding the reversal of inflation into deflation. This could lead to hefty discounts for consumers during Christmas shopping season. If inflation is about to turn into deflation, as Wood suggests, then the Fed could find itself in a scenario where it over-tightened monetary policy and needs to pivot to prevent the economy from entering a hard downturn, continued Wood. The Federal Reserve Chairman is signaling another 75 basis point increase in interest rates during its September meeting. Paul Volcker, Fed Chairman of the 1980s, tamed inflation with huge interest rate hikes. But, the macroeconomic environment of the 1980s was a general recession. Current Federal Reserve Chairman Jerome Powell thinks that the current macroeconomic environment is different than in the 1980s. Faced with a 2-year supply-related inflation shock, Powell is using Volcker's sledgehammer and, I believe, making a mistake, Wood said. The Fed seems to responding to COVID-related supply shocks spanning 15 months the same way that Volcker battled inflation that had been brewing and building for 15 years. I would not be surprised to see a significant policy pivot in the next 3 to 6 months, she added. Wood would welcome an about-face by the Fed because she is a growth stock investor. These days, it seems like whenever the stock market rises, Powell finds a way to make a speech about how much interest rates are going to be increased. Rising interest rates have cut the value of ARK Invest's flagship investment fund by a lot. The ARK Disruptive Innovation ETF fell 74% from its peak in February 2021. Federal Reserve Chair Jerome Powell has now recommitted to battling inflation. I am determined to keep raising interest rates until the job is done, said Powell on Thursday. In a speech today, Powell reiterated the importance of getting inflation under control soon. That is because he does not want the general public get too used to higher prices. And then come to high prices and high inflation as the new normal. Powell said, expectations play an important role and were a critical reason why inflation was so persistent in the 1970s and 80s. History cautions strongly against prematurely loosening policy, said Powell. I can assure you that my colleagues and I are strongly committed to this project and we will keep at it until the job is done, Powell continued. The next central bank meeting is on September 20th and 21st, and this was his last speech before the meeting. The Dow and the S&P 500 held steady on Wall Street. This is getting to be a familiar refrain from Powell, and so the stock markets seem to have this expectation baked in. U.S. Treasury yields traded higher. The 2-year note climbed by 5 basis points to 3.49%. Markets widely expect the rate-setting Federal Open Market Committee to enact a third consecutive 0.75 percentage point increase this month, said Goldman Sachs. Goldman Sachs and Bank of America expect a 3/4 point increase in interest rates in September. One reason for acting aggressively is to make sure that inflation running around its highest rate in more than 40 years doesn't become ingrained in the public consciousness, Powell said. The Fed has the responsibility for price stability, by which we mean 2% inflation over time, he said. The longer inflation remains well above target, the greater the risk the public does begin to see higher inflation as the norm, and that has the capacity to raise the costs of getting inflation down, Powell also noted. Some Wall Street analysts say that inflation is abating. For example, gasoline prices have been dropping steadily since peaking in June at above $5 per gallon. The Fed gets its last look at inflation data before the meeting next week, when the economists at the U.S. Bureau of Labor Statistics are expecting a 0.2% rise in the Consumer Price Index. That index was leveled during July. But it was 8.5% higher than in July of 2021. The inflation pressures have come largely from pandemic-specific causes, said Powell. When inflation first began to rise in the spring of 2021, Powell and his colleagues dismissed it as transitory and did not respond with any major policy moves, said Bank of America. The Federal Reserve waited until March 2022 to start raising interest rates. During the 1970s, a failure to aggressively raise interest rates allowed expectation of higher inflation for longer to become embedded into the public psyche. We need to act now, forthrightly, strongly, as we have been, and we need to keep at it until the job is done to avoid that, he said. But the U.S. labor market is still strong, and that also contributes to higher inflation. Powell wants to make sure that higher labor costs are also under control because it is a factor in inflation. The economy could experience some pain from tighter policy, Powell said in a speech in Wyoming last month. What we hope to cause the labor market to get back to levels that are more consistent with 2% inflation over time, he said. Since it started aggressively raising interest rates earlier this year, the Federal Reserve has promised to defeat inflation with a soft landing for the U.S. economy. In other words, they are trying to reduce inflation to 2% without sparking a recession. But economists and the general public have serious doubts about the ability of the Federal Reserve to achieve that goal. Economists are now speculating that the Federal Reserve is targeting what they call a growth recession. Diane Swonk, the chief economist at KPMG, told Bloomberg said, "In my mind, these comments signal that the Fed has given up on its hopes for a soft landing." President of the Federal Reserve Bank of Cleveland Loretta Mester said, "I believe that the Fed has more work to do in order to get inflation under control." Wall Street analysts are also expecting that the Federal Reserve will raise interest rates by 75 basis points at its September meeting. "Overall, I don't think it changes the hand for the Fed as it goes into the September meeting," said Charlie Ripley, Allianz Investment Management senior investment strategist. But what do you think? Please leave us a comment below. We would love to hear from you. Please hit the like button. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.